One of the great American industrial companies, Caterpillar, reporting second quarter results that beat both on the top and bottom line. Chairman and CEO Jim Umpleby from Caterpillar joins us now exclusively. Jim, it's fabulous to see you on a day when people seem to realize that the business that you have is probably the best I've ever seen it in the history of my watching Caterpillar.
Well, good morning, Jim. Great to be with you and David this morning.
So tell me, when you are making more, have more demand than you've ever had, and you're making it for less money, what does that do for the bottom line?
Well, I want to start by thanking our global team for just another very strong quarter. Our sales are up 22%. All three of our primary segments were up between 19 and 27% on the top line, $5.55 in adjusted operating profit per share. First time we've ever broken $5. So maybe that's answered your question. The results are showing up in the bottom line.
That's the fabled number that we all remember from 1982, when we said one day Cat will do it. Excuse me, and you did it. Now, one of the things I thought was very good was that you did not hype what can happen in 2024, but there is an amount of infrastructure money coming your way that they want to buy American, and I know that from speaking with the people who are involved. I want to know whether you're prepared for the influx of orders.
Well, Jim, we do serve a diverse set of attractive markets, and we talked a lot about all three of those markets on our earnings call. And we are starting to see some benefit from the bills that passed earlier this year. About 75% of our construction industry's business is what we call non-residential, and we are starting to see some benefit from that. It's uncertain in terms of how long it will take for permitting to occur on certain projects, but we do feel that the projects will manifest themselves over time, which will help us. We are working very hard to ensure that our supply chain is robust enough to handle future increases in demand. And we have seen improvement, but there are some pockets of real challenge that we're still dealing with.
Well, why don't you go over those? Because I own the Frank Chapel Trust, and I have been a huge believer. And at 206 said, listen, this is the bottom you came on. But I want people to understand that not everything is perfect, and you've got some examples, including the next quarter, which some people could say is not going to be as strong as some would like.
Well, we do expect the third quarter to be up in both revenue and margins compared to the third quarter of last year. Sequentially, we expect it to be down second quarter this year to third quarter, but that's in line with our normal seasonal pattern, so that shouldn't be a surprise to anyone. We are still dealing with some supply chain issues. The situation has improved, but we do have areas of challenge, particularly around large engines, which impacts energy and transportation, and some of our larger machines. And we are still dealing, believe it or not, with still some chip issues, which impact things like displays. But again, overall, it's gotten better, but it only takes one component to prevent us from shipping a machine or an engine.
Understood. There is a great misunderstanding about your company. I still speak to people and say, you know what, their China business isn't that strong. I think I've got a half dozen businesses that you have that matter more than China these days. Isn't that true?
Well, China typically is 5 to 10% of our total company sales, and we told our investors during our first quarter call that we expected to be below that range, and the market has gotten even weaker, so we expect to be, again, down in China. But the good news is, even with the Chinese market below that 5 to 10% of our typical range, we just produced record results. Again, as I mentioned earlier, we serve a diverse set of end markets: oil and gas, power generation, mining, construction.
Yeah, I want to actually ask about another one, but I'd love to come back to China for a second. Not as much really as it matters to Cat as it does to just broadly speaking. I mean, you indicated things were even weaker than you anticipated. What is going on there, Jim?
Well, I think it's important, David, to remember that our business in China is primarily hydraulic excavators 10 ton and above. So when we talk about weakness in China, we're really talking about that market. And that market does move up and down over time. We saw a couple of very strong years in 2020 and 2021, a decline in 2022, and now a further decline in 2023. So I think it's difficult to draw too many analogies from the market that we serve to the total Chinese economy.
Okay, well, I'll try and get you to draw an analogy then for something we talk about every day here, which is data center demand. In particular, of course, the rise of AI and what that's going to mean. I did note in your call that was called out very early in terms of power generation. Can you explain to our viewers how you're benefiting from that?
Yeah, well, thank you, David. We sell backup generator sets for data centers, and that business is quite strong. As you mentioned, it's being driven by AI and a lot of other factors. And not only is it increasing our sales of generator sets for backup, it's also, of course, increasing total energy demand, which we think is a positive thing for our business. Our customers use our products to produce the commodities to help satisfy the world's global energy demand. And one of the things that's also occurring is more renewables get added to the grid. That does create some instability issues due to the intermittent nature of those power sources. We believe that presents an opportunity for us over time. This is more of a medium, long-term kind of opportunity to sell both our reciprocating engine generator sets and gas turbine generator sets for what we call distributed power generations across the grid. And those engines and turbines can burn a whole variety of fuels, natural gas, hydrogen blends, biofuels, and all the rest.
Well, Jim, I think that when you talk about that, what people have to realize, there's two camps who follow your stock. There's the camp which says that this has got to be a cyclical peak, and therefore you must sell it. And then there's the camp that says, wait a second, this man has come in and decided, you know what, he's going to de-cyclicalize this company. When I see this quarter, I tend not to believe, well, geez, I don't see anything about soft landing. I don't see anything about Fed. I don't see anything about the 2-year. I don't see anything about the 10-year. What I see is a group of businesses that are uniquely purposeful for this time. Can you talk about how you made this company uncyclical and you de-cyclicized it?
Well, I'm very proud of our global team and the hard work that they've done. We introduced a new strategy in 2017, and we told our investors that we would produce higher operating margins across at different sales levels, and also would produce more consistent, higher free cash flows. I'm very proud of what our team has done. To your point, we do serve a variety of end markets. So oftentimes when people think about Caterpillar, they just think about construction. Very important segment for us, and we're doing quite well there, but we have other segments as well. And so, again, just proud of what the team has accomplished. You know, between 2017 and 2022, for every year except 2020, we produced $5 to $6 billion of free cash flow. And even in 2020, when we lost more than 20% of our top line, we still achieved $3 billion of cash flow. Yeah. Today, we told investors just in our earnings call that we expected to be around the top end of our range for ME&T free cash flow. That's around $8 billion this year. So again, very, very excited about how the team is performing.